Okay, hello. Hey guys. Trying to keep up with the daily videos. You know, I thought about, I really did think about making another AVGR video. Did some crazy HC Wainwright bullshit, but since I did one yesterday, I wanted to cover an old play from April that I think really teaches a lot of important lessons about how strong stocks move. And this is important because the market's weak right now, but eventually the market's going to be really strong. And when it starts to get really strong, you'll start seeing moves that are quite different than what we've been seeing. Outside the last couple months, we had a couple weeks of strength here and there, but nothing very sustained. But when the market does get strong again, this is when uh, big gappers on the day can start being really strong, right? And a lot of short sellers who like to short pre-market pops, especially if they're over 50%, 80%, 100%. They take their morning losses. Maybe they try a second time, and a lot of times they lose again, and then they decide to bail on the rest of the day because they just consider that they have no edge in this chart, um, and they just live to fight another day on a pre-market capper that they hope will give a morning fade, right? But there's a lot of money to be made on these strong plays and strong markets, but you're gonna have to know how to read liquidity on a chart, right? And it's gonna be a lot of the same stuff talked about yesterday, talked about in the videos. And it's a lot of stuff that has to do with chart painting, a lot of stuff that has to do with volume, that type of thing. So this is Seco from April 4th, 2023. And this is such an interesting chart because, it started at 60 cents. It makes a pre-market move to 1.1. So, you're talking 80%. Uh, I did a little short squeeze here, a little 5-minute flag action through $1, and short's going to be interested in it, right? So I remember on this day, I actually was short in the top in on these. I like big pushes because this 5-minute flag push and this started a 5-minute flag push. I remember being short this in like the 106s, 105s, and holding throughout this entire pre-market, hoping I would get a big crack. Um, but sometimes you take your patterns and then a different chart develops, right? And you have to make a decision about, are you going to get out? Are you going to adjust your risk? Are you going to keep your risk? Usually the simpler you make your exit plan, the better. If I'm short this pattern in in 105, and I like to short long traps, which means I'm assuming it's not going to break high day. You just keep your risk at 1.1 and have tight risk and just play the odds, hope it works. Usually, that's the play. So, very interestingly, from 7:50 all the way to market open, it's hour 40 minutes. It sets up a flag of consistent lower highs. Now, painted lower highs in the pre-market can be super strong, especially in strong markets, especially on rig stocks, especially on low floaters. Uh, when you get just like these very tight lower high bands right below high day, they can just be insane, literally insane. This is one of the more like extreme examples of this. Um, but I was at least hoping like, oh, maybe they'll at least swipe support to the 1 minute 200. I could get a cover, and if it gets manipulated back up, um, at least I got it. At least I got a partial, and I'll stop out on my rest. I might have a small green trade on it. Um, but again, what are we always looking for? Market open, the volume, right? Starts with market open volume, 800K. Now it is a $1 stock, but this was a tiny floater. And the 800K is pretty significant, but it did push, stuffed right below high day, pulled back, and I'm like, great, maybe they'll swipe it, do some soaky EBS, and come back up above EWAP. Nope, they just insta squeezed it into a halt, and I got stopped out. That's why I keep tight risks because my risk got hit and it went up another 10% higher. So that's why I short very specific patterns, very specific risk levels. And then when it, and of course this went from 700K to 1.3 million. Um, and again, all pulse past high at 8 tend to gap up, and and then a lot of times what I'm watching for is what's the I never I'm not a fan of shorting out of up halts in the vast majority of situations, especially when a stock's trading millions and millions of shares and had this crazy chart paint. I'm just gonna assume the stock is rigged. There's a lot of volume in it. Let's wait for one of my, for example, a 5 minute, 5 minute fake 5 minute flag pattern, like something like that. So in strong stocks and strong markets, I look at the 1 minute 9. 1 minute 9. So many times it just goes sideways into the 1 minute 9, straight up, sideways, straight up, and it's just on really strong stocks or strong market, they'll just go up then 1 minute 9 EMA. Like they just, and sometimes they go up it for 40, 50, 60, 70%. Like go look at UCAR on June 1st and for some examples. Um, so it makes a big push. It starts doing some higher low choppy action below high day, right? And um, I didn't short this, but a lot of times you could do a lot of tape reading. If you see there's like a level here at 152, 153, every time it's breaking, the ask is getting really heavy. There's usually hidden sellers, right? Like look at this. Look at this candle. There's big initiation. Just stuffs, comes back down, tries to rotate again, and there's just the same hidden sellers there. But I didn't hit that. But what do we get right after it? The fake 5 minute flag, right? We have an up only squeeze, right? Here's the 5 minute 9, right? Here's the 1 minute 50. Got a nice pullback, clean soak. And like I said in the video, and I always say, the more aggressive the initiation, the better. And the closer it gets to high day, the better. So this is a perfect 5 minute flag trap after up only. 1.5 is a key level, breaks 1.5. And you can just read the ask, record your tape, look at the ask, and you'll see the same hidden sellers. Look at this volume, man. Look at the volume on this candle is actually the highest candle. This candle. That's because there's so much buying trying to get pushed through. But a lot of times there's just hidden sellers. At a moment it touches a level, like the bid starts dropping, the bid gets soaked, it pushes that level again, refuses to move. And you love to see the stall, man. And again, the purpose of shorting this, just like shorting this candle here, right, is that you're assuming it's not going to break high day. So your risk is very well defined. You can be in the 150s, and you can be risking high 150s, right? And that's pretty huge because the stock's already up 170%. But your risk is 3-4%, and there's a lot of downside, so it's a good pattern. But the thing about strong stocks and strong markets is even if the trade goes your way, and sometimes it goes your way like 15-20%, when the market gets real strong, a lot of these morning long trap moves will get reclaimed later in the day, and you just can't do anything about it besides taking partials on the way down and hoping the trade works. So uh, but this is a perfect fake 5. I wanted to show the pre-market paint. This is a very, usually it's not this extreme. This is a very extreme example of pre-market lower high paint. That could be super strong. Market open volume, very important. Fake 5 minute flag. And then you get the nice lower volume pullback. You get the pullback to the 5 minute 9. They try to do another fake initiation, right? There's like a little 1.45, 1.46 range right here. Some buying comes in. People are trying to, get the next leg up. Instantly rejects, nothing but selling straight below VWAP, right? And if you're short up here, you're like, man, this is great. I'm like 30 cents in the money. I'm up 20%. Then, again, more backside stuff. Again, as a short, you don't have to be worried about super quick reclaims. Because now that we're after the 10:30, 10:15 morning volatility, any long in the midday is going to take time to set up. And you don't have to worry about, crazy rotations, at like 10:50 or 11. Like it usually, even if a stock, we're going to see this, on this chart. Even a stock is super strong and crazy manipulated, midday structures take a lot of time, and they will a lot of times they'll swipe longs trying to buy too early, right? So get a deep pullback below VWAP, starts basing higher low, higher low, higher low. What do we know about higher lows? They tend to crack. That's what we know about higher lows. They're bear flags. They tend to go down. Um, so yeah, it goes down 1 minute 200, just like AVGR. What I'm saying, you always cover at the 1 minute 200, right? Another common MA midday, especially in these really strong ones, is a 5 minute 50. The 5 minute 50, 1 minute 200 are roughly equal to each other. If you look at the 5 minute 9 and the 5 minute 20, very clean. 5 minute 20, like when I see super clean 5 minute 9s, 5 minute 20s, um, like especially when they're respected this well, I will look at the 50 for the 5 minute. I'm like, okay, this was super clean. On a 9 and 20, might as well look at the 50. Sometimes I'll do the same thing on the 3 minute, but in this case, the 5 minute is the time frame that is most clean. Um, and it's why I always take some profits down here no matter what if I'm a short. And then does a crazy kind of strong stock move, right? You get this, what is essentially a bid prop. This is very much a bid prop. It's just propping for 30 minutes straight. And usually this is actually a good pattern because you see some lower highs at 137 here. There's just 140 kind of psychological level, and it just kind of grinds through it, does its first mini pullback, starts getting really heavy and cracks. And a lot of times this is a good pattern to short, and it's especially a good pattern to short on lower volume stocks that aren't as freaking insane as, you know, these crazy moves. But a lot of times it cracks the lower trend line and then fades. But this is a very good example of um, a lot of the best long patterns are just short patterns that don't work. And same with just like the 5 minute flag, fake 5 minute flag. A lot of the best shorts are long patterns that don't work, right? Um, so my expectations after seeing a bid prop like this, where the bid is just clearly very cleanly supported, you almost never have to worry about this going straight up, man. Even if the long's going to work, it'll crack the lower trend line, it'll wedge, and then it'll come back up. But yeah, I don't like seeing that. I don't like seeing the lower trend line break, the soak, and then big volume come in. Like that's not that's the exact opposite of what you want to see. It's just an example of a very bearish pattern turning very bullish. Okay, so come and just look at this move. Comes up, reclaims a volume coming in, does the real flag, does one of these, long shakeouts into like the most insane amount of buying you ever seen in your life. You know what I mean? It's just this is 3 straight minutes of 3 million shares and market orders pushing this thing like straight up. Never short high day on these. Yeah, high day doesn't work in this type of play. Super strong stocks, trading tons of volume, doing manipulated crap, are not good high day shorts. You might get lucky, you might guess the right one eventually, but if you want to play that game of guess the high a day, what are you gonna guess this one over here, or this one over here, or this one over here, or this one over? You know what I mean? Like, you could say to yourself, oh, this high day is really painted, right? Maybe it swipes these very tight, lower highs. Maybe it just swipes it and goes down, and then what happens? It goes straight fucking up. So what? Are you gonna try to guess this one? Are you gonna try to guess this or this? Like, um, you can play that game if you want, but I don't play it. So, a lot of shorts talk about not being successful midday, and we went over this in yesterday's video, but a big reason many shorts are not successful midday is because the best shorts on strong stocks are usually after, just like AVGR yesterday, are after big moves, pullbacks, and then usually an hour, 2 hours of consolidation, right? You want to see painted levels. You want to see aggressive moves. You want to see something on a chart that people are going to think is super strong. There's no way it's not strong. Look how much volume's coming in. It's going to high day. Um, there's no way this fails, right? That's what every retail long is thinking at. Every retail short that got squeezed is thinking that. Um, and really, that's what makes it the best short. The best shorts are the shorts that no one wants to short, right? Um, the less shorts in a stock, the weaker it is, right? So you get a big push, you get a big push. It's just all just like, you know, crazy manip Momo. Again, same trick that they did here. This is just like, um, these like what's funny as a as a short seller, I hate on strong stocks. I hate seeing deep cracks like this. I hate it. Like deep cracks like this invite more shorts to prematurely short the stock. I want to see most of the time, and it doesn't apply to this play because this deep cracked right away, but some of the best shorts are the ones that have shallow pullbacks and higher lows pushing to high day. Those are the best. Deep pullbacks, deep, crazy, emotional pullbacks are strong. You don't want to short these. This is what this squeeze happens because of how extreme the dump is. And not only that, it gives a weak bounce and then dumps again, right? So it's like up until this point, this is just nothing but weakness for like 10 straight minutes, and every short thinks they're going to miss the play. What happens? They swipe, they initiate, they squeeze every short that thought this was weak, right? And then we get a very similar pattern. We get another deep pullback, but now we start getting. I always like paying it, but now A, we're starting to get really extended, and B, um, I know on these strong stocks, they're very liquid. They go to abuse backside liquidity, right? It's so easy. There's so much liquidity that it's so easy to paint a chart, set some lower highs, abuse some backside liquidity, do like your final move, just like AVGR yesterday, and then do the real fade. And by the way, this was A plus swing short, right? This went straight down to 87 cents the next day. Anyway, really quick, 1.7, and I was watching my video on this today. I went back to my old April 4th video, and what I did, very simple. I put an alert right at 1.7. It bounced because it was 1.7 here, 1.69 here, and I was like, great. Once I saw this push, I was like, I put an alert right here. That's the painted liquidity level, and I will wait. And sometimes I will wait 1 hour. Sometimes I'll wait 2 hours. Doesn't matter. I'll just keep waiting. I was like, I just want this level to get broken before I short it, right? Because it's a very painted liquidity level. What do? Deep pull back to the 1 minute 200. Aggressive initiation. I love to see aggressive initiation off of support. It's so weak, but you have to wait for your levels, right? So it pushes, and I was hoping this would go through 1.7 right away. Didn't do it. Pulls back, and then you get another aggressive initiation, and I was like, this is, just like my old aggressive push long trap video. It's what you like to see. I love to see it, and I remember actually shorting right up here. I shorted at 1.78, and it stalled, and then it did another very bullish pattern where they walk it down, very clean downtrend, and then they broke the downtrend. And what's most interesting about this is on this candle, when they broke this downtrend, there was 2,000 shares on the bid at 1.72, and people were selling into it. And right as it got this almost to zero, someone flash quad stack bids. You'll see level 2 manipulation. And quad stack bids doesn't always mean it's weak. There's times where it's strong, but in this case, they flash these like so quad stack means there's 4 bids that are all the same number, right? So it'll be like 20,000 shares at 1.78 through 4 different routes. So it's 80,000 shares on the bid. So this went from 2,000 to 80,000 on the bid. And what happens is, if algos see that, algos start buying. If retail sees that, they start buying. A bunch of buying liquidity comes in. But usually what happens is if those quad stack bids are like fake bids to push a stock up, the buying will slow down. It will come back to those bids, and either those bids will either get taken out, or in this case, they pulled them. So it came back to 1.72. A few thousand shares got sold into it. They pulled the bids, instant downhaul, right? That's why this downhaul happened. Well, not instant, but just nothing but selling into the downhaul and then the fade to 87 cents the next day. Um, and that's in at this point, you had one massive squeeze, two massive squeeze. The odds of three massive squeezes in the same day, especially with a painting liquidity level like this, are very low. So, um, a lot of understanding these types of moves, like this type of move that attacks this liquidity level, you have to look at the chart. You have to look at, you know, a stock only has so much liquidity, and the way strong stocks top is they give a strong move at the top and then they pull, right? And then the fade's usually really really big. Um, and this is just A plus. This is 1.7 up only, level 2 long trap, and then they pull it, and then gap down, fade in the after hours, gap down next day. Stock has no, the stock's a 30 cent stock right now. That tells you a lot. It's just a liquidity stock, right? That's about it. So, yeah, I could have talked about AVGR today, but I really wanted to talk about this. I thought it was interesting. A lot of great lessons about how liquidity works on this chart, and yeah, I hope you guys enjoyed it. I'll try to make sometimes I'll go back and pick out these old charts that are teach you a lot of good lessons, right? So, hope that helps. See you guys.